You were listening to ChartingWealth.com for Friday, the 18th of May, 2018. We see stocks and bonds down for the day, gold up just a little bit. But let's talk first about our book, Charting Your Way to Wealth, is now available. We're sending out copies every day to folks that are purchasing it. Please support us and purchase your copy. Every dollar that we receive, of course, goes right back into the website, right back into all the work that we do. And we so appreciate you helping us, supporting us, and being there for us as we've tried to be there for you. Low these last, going on 3 years, I believe. Anyway, coming to you every single day. Now, let's jump into these markets. Oh, the way to buy the book, of course, is go to the website, chartingwealth.com. Check out the YouTube channel. If you're a subscriber, and that is for free, you can sign up at the website. You'll see in your email that you get every day, and you'll see it at the website under the daily market reviews and under the comments at the YouTube channel, links to our online store where you can go buy your own copy of Charting Your Way to Wealth, and you can also buy copies of the Trader Journal. You all need those to fill those out every day. It becomes your real diary as a trader, as an investor. In your learning curve will go through the roof if you complete that daily market worksheet as you listen to us. Just 10 minutes every day is all that we ask when the market's open. Let's jump and see what's going on the S&P 500. We see that so far we have a green up candle for the week, even though it was down just a little bit, 0.08% on Thursday. It is still an up week on those Heiken Ashi candlesticks, the second up week. We see the derivative oscillator still negative, and again, with the bit of a pullback on the day on Thursday, we're not crossing over yet. That may happen if it's a big up day on Friday. And of course, there's going to be some volatility on Friday with May expiration happening this Friday. So we'll see what happens if the market booms, and there may be a crossover, but the derivative oscillator is still negative. Price percent oscillator has not crossed over, even with 2 weeks of green up candles. Look at the 2-day chart. Of course, it crossed over going up back on the 16th of April. And what have we seen happen lately? 3 up candles starting on the 2-day candle ending on the 8th of May, and then things have flattened out. In fact, the latest candles, we see a red open box candle, which of course shows significant slowing. It's not a red solid down candle, but it's the next thing to it. And then we have so far forming a green up candle, but neither one of those candles has surpassed where the market topped back on the 2-day candle ending the 14th of May. I'm trying to speak too fast. Again, I want to keep to my 10 minutes. We see the derivative oscillator continuing to gain upward momentum. Price percent oscillator heading up, not at the same strong angle that it had been for that 2-day candle ending on the 16th of May, but we again are seeing a bit of a slowing. Now we'll see that more pronounced as we look at the 4-hour chart. Look what we see happening at the end of the day. We have it crossing over going down. The derivative oscillator crossed over going down back on the 16th. We talked about that in the morning. And of course things again tracked sideways going up until the end of the day. We have a red doji, means indecision, tending down, and the crossover again. The price movement's been weak enough that the oscillator has flipped over to the negative, so keep your eye on things. May mean that we don't have a crossover going up. Price movement by the end of the week, a weekly vertical crossover. Price movement still above the 2-day trend line, but again, keep your powder dry. Pay attention to these charts. What do we see going on now, moving from the S&P 500 to the Qs? Qs is in its 3rd week of up movement. It's a little bit closer to crossing over, but the derivative oscillator, price percent oscillator, is still in the negative on the weekly chart. 2-day chart crossed over going up back on the 4th of May. And again, 4 up candles and a sideways slide so far. A red spinning top was the last full 2-day candle, just the first day of this latest 2-day candle. It is a green spinning top so far. Again, both tops, of course, mean indecision. Not as much indecision as we see with the doji, but indecision. And we see that we've now, with the drawing of this latest candle, we violated the 2-day trend line. So again, That's showing some real weakening. Derivative oscillator losing momentum, price percent oscillator not going up at the same rate it had been. We look at the 4-hour chart. What do we see? Well, it crossed over going down back on the afternoon of Tuesday the 15th, and really again sideways slide, both candles down candles for the day on the 17th on Thursday. So again, down movement there on the Qs. Don't know that we're going to have a crossover on the weekly vertical going up at the end of the week. Again, Friday is going to be volatility. Could have that happen. Of course, that would set us up for a potential of an up trade Monday after idiot hour around 10:30. Those of you who know our two trading theories that we work on, both the weekly vertical crossover and then that pullback on the 4-hour chart, both of those are discussed at detail in our book, Charting Your Way to Wealth. So please get yourself a copy of that so you totally understand what it is we do here. And again, it works like clockwork many times over and over and over. We want you to practice it and get good at it. Remember, this is the hardest time of the year to trade, the most difficult, because the market tends to be sluggish and drag sideways. Again, volume tends to go out of the market. This is nothing new, my friends. It happens every year in the summertime. That's why it's called the summertime trading zone. But at the end of the summer, we go into the fall-winter trading zone, and it's the fat, beautiful time of year, but we're going to still practice, find trades where we can. What do we see going on the 4-hour chart when it comes to a crossover? Of course, we talked about how it crossed over going down back in the afternoon on the 15th, and we've continued to see that derivative oscillator gaining downward momentum. The price percent oscillator spiked over, going down at a faster clip. So keep our eyes on the Qs. Back to the weekly chart, going to bonds. What's going on? 20-year bonds down 0.51%. Looks like we are going to probably end the week with a weekly vertical crossover going down. Again, hasn't closed yet, so we don't call it until it happens. But if it does, might be able to take a short position on Monday around 10:30. We'll check out the markets at that time and look to do a virtual trade going down. Again, a short position, buying puts on TLT or an inverse fund. The problem with the inverse funds on 20-year bonds is that they tend to have a big spread between the bid and the ask, which again is not helpful. That's why we'll probably be looking at a potential put trade there. Now, what do we see going on with the derivative oscillator? Of course, it's already flipped over. Price percent oscillator heading down quite stiffly. Let's look at the 2-day chart. It crossed over going down back on the 20th. Then sort of tracked sideways for a while after 3 weeks of down movement. And over the last 2 weeks, it started moving down again. I'm sorry, not last 2 weeks, last 2 candles, actually. One full candle and the first half of the latest 2-day candle. Derivative oscillator started gaining downward momentum. Price percent oscillator clipped over going down. After those 3 days of down movement starting on the 2-day candle ending on the 20th of April, the 24th of April, and the 26th of April. That's when we got that sideways slide. Again, price movement well below the 2-day trend line. In fact, once the new candle draws and completes, we can draw a new trend line with a steeper down arc. Let's keep an eye on what's going on the 4-hour chart. Of course, it crossed over going down in the morning on Tuesday the 15th, and unabated down movement, but for some up movement in the morning on Wednesday, but Wednesday afternoon, Thursday morning and afternoon continued strong down movement well below the 2-day trend line. Derivative oscillator gaining downward momentum. Price percent oscillator heading down quite nicely. So we'll look and see at the end of the week, and we will announce it. Those of you who signed up for our texting service, which again, instructions on how to do that are sent out to everyone who subscribes. You can subscribe for free at chartingwealth.com. You text the word Charting Wealth to the number 33222. We'll put you on the list. If you live out of the country, we do not have the ability to text to you, but it's easy enough to listen to the comprehensive review and forecast that we'll record at the close of the market on Friday. So you'll know what's going on. Okay, that's where we are on 20-year bonds. Lastly, we go to gold. Gold was up just a little bit for the day, 0.06%. Gold still movement well below the weekly and the 2-day trend lines. Gold is really spiked over going down on the latest derivative oscillator and price percent oscillator. Derivative oscillator gaining downward momentum, price percent oscillator hockey sticking over, going down even more. Of a red down candle, little bitty wick on top. We like to see those just flat, but a long wick on the bottom, solid red, which means strong down movement so far for the week. 2-day chart, we see the derivative oscillators hiked over, going down even more on the first day of the latest 2-day candle. Again, price movement well below the weekly and the 2-day trend line. Derivative oscillator gaining downward momentum. And of course, what's going on the 4-hour chart? Well, we jumped in after the down move in the morning on the 15th because our pullback ended and we had a jumping in point. And of course, the market went down over the next 2 days. But what do we see happening now? Is it bottoming? Well, that's an important question. The derivative oscillators lost some downward momentum. Price percent oscillator is not flat, still heading down, but keep your eye on things in case gold tries to pop up in the morning, trying to see if there's any floor anywhere in gold prices over the last many weeks, and really not really seeing anything at this price point. So again, we'll continue to keep our eye on things and just sort of see what happens with gold. Down in the morning on Thursday, up a little bit in the afternoon as far as our Heikin Ashi candlestick showing our average pace. Still down, but again, getting sort of hitting around the same point for about 2.5 days or so. So keep your eye on things. We don't want to lose gains that we have made after jumping in. Again, this is a hard time of the year to trade. We try to trade where we find them, but keep your eye on gold for your virtual trade. Again, that short trade in gold. Hopefully, it'll continue to pay dividends. Folks, that's where we are as we end the day on Thursday. Go into Friday the 18th. Again, don't forget it's options expiration Friday. So we expect some volatility there in the market. And again, can offer some sweet rewards to us, setting us up for some trades over the next week. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.